Well, for all the day's reporting season moves, James Gerrish from Shaw & Partners and author of Market Matters joins us in Sydney. Let's start with the biggie that's dropped this morning, obviously CBA. How are you looking at those figures as we see them?
It was a slightly better than expected result from CBA. A couple of things that caught my attention. EPS was at $2.20 versus $2.10 expected by the market, so that was a beat. You mentioned the dividend at $1.50. The market was at $1.35 for the dividend in terms of consensus. There are a few outliers there. UBS were looking for $1.53, but pretty much, that's a solid divvy at $1.50, and it represents about a 68% payout ratio. So the other thing that caught my eye in CBA was Tier 1 capital, which sits at 12.6%. But then if you think about the planned divestments they've got in train, Tier 1 capital is going to be nearer 13%. So they're incredibly well capitalised. They're obviously very much exposed to an improving economy. And this result is, in my view, a pretty good one for CBA.
All right, pretty good one scorecard for the CBA. What about CIMIC? It's had a pretty rough trot of it in recent years, but look, it seems to be a turnaround story at this stage. What did you take out of that result?
Yeah, Scotty, looking at CIMIC over the years, you always get a little bit nervous around their results simply because it's such a complicated business. And today they've certainly lived up to that. Obviously, they're divesting Tees, which is sort of muddies the waters a little bit in terms of the result today. But overall, I think it looks soft. So they've come out and delivered underlying NPAT for the year of $600 million. We're at $645 million. In terms of expected NPAT for the year. They have beat in terms of the dividend. We're at 50 cents. They've delivered 60 cents. They talk a big game about work in hand, etc. going forward. But I also, the NPAT guidance for FY21 is 400 to 430. So the market's at around, the market's north of 600. So I'd question that number in terms of whether or not it obviously they've stripped out Tees out of that number. But to me, it looks a little bit soft in pretty much all parts of that results, guys.
All right, James, let's move to Praemium, the funds administration provider. It's enjoyed that momentum in its international business there, and obviously helped along by that acquisition of PowerWrap.
Yeah, absolutely. So a good result in terms of the top line numbers for Praemium. So they, the key that you look at in terms of Praemium's number is the EBITDA line. The EBITDA line came in at 7.3 million for the half. The market was at 7. We're at 7.1. One thing I would call out, and you just mentioned it there in terms of PowerWrap. So they obviously acquired PowerWrap through the period. That has had a negative impact on margins. So gross margins were lower than where we expected it. So PowerWrap's a lower margin business. Their margins are a lot lower than the traditional Praemium business. So to me, good on the top line. A little bit of softness in terms of margins, but you made a good point. Their international business is going gangbusters. This is a business that's been performing well over the last couple of halves. The momentum's strong. We got a buy and an 80-cent price target, so it's a bit under our price target, a bit over our price target at the moment. So look, a good result, but the margin's a little bit soft.
Finish off with Northern Star, operator of the Super Pit. We saw a record underlying profit after tax and a record dividend. Super result.
Yeah, really good result. It won't come as a surprise though. It was pre-released in January when they updated, when they released their quarterly numbers. So this won't be a surprise to the market. So that NPAT number with 185 was really strong. You may mention the dividend; it was really strong. If I think about this combined entity, so Northern Star merges with Saracens this Friday. Northern Star is going to do about 1 million ounces. For the year, Saracen about 600,000 ounces, so that's obviously 1,600 ounces in the combined entity. This is going to be a business that should do NPAT for the full year around that 800 million or just shy of $800 million. So the future looks pretty good. They've got some aspirational targets out to produce 2 million ounces by 2027. So this is a growth that made sense for them to merge. There are obviously some strong growth going forward in this combined entity, but Friday you'll have that combined entity on the ASX.
James Gerrish, Shaw & Partners and author of Market Matters. Thanks for joining us on the program. Enjoy the rest of the day.